Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our Monday buys video. So every week I add brand new equity into the Roth IRA over on M1 Finance. This helps kick off that $10 threshold in order to kickstart and reinvest dividends that are sitting in cash in the portfolio. This also helps to add dollar cost average every single week into the market and of course max out that Roth IRA. So this week I've already sort of gone over what stocks I want to purchase, but I want to go ahead and go over and let you guys know. And let me know in the comment section below if you agree or disagree. So before we get into it all, if you are brand new to the channel, hit that subscribe button below. If you do enjoy the video, find it helpful, hit the thumbs up. And if you have any comments, questions yourself, or want to let me know what stocks you are buying this week, let me know in the comment section. I would appreciate all you guys' feedback. I like to see what other investors are buying. And let's go ahead and get into the video. So normally what I do is I use my spreadsheet here and I take a look at what stocks I'm currently negative in. You know, these are stocks that I've already reviewed and verified that they are stocks and companies that I want to buy and hold for the long term over the next 5, 10, 15, 20 years. They all have grown and paid out a dividend for multiple years, with the lowest dividend here is probably CenturyLink. They just did a dividend cut, but I just bought into it just within the last month or so. It's a very small portion. Now the other stocks here, these have all grown and paid out dividends for the past 8 to some 50 years. Now of these stocks here that are within the portfolio, a few of them are negative by around 10%. So AbbVie here, for example, equity wise, it's down around 12%. Now this doesn't include how many dividends they've actually paid out. This number here, AbbVie, is showing negative 12.3. If we actually take a look within here in the portfolio, this shows it as being down 11.78. That is because the way that M1 Finance tracks their gain and loss is it wraps dividends in here. So over the course of the last year, I've actually lost $72.58 in the stock, but M1 is showing me that I've made $10.52 from this specific stock. So it cancels out some of that loss as far as gains, and the return there is also showing with the earned dividends or the paid out dividends kind of wrapped into that. So here I use my spreadsheet here to get a better estimate of how much I'm actually down in the position in cash and in the percentage change here. Now these stocks here, I currently have them sorted by when they are going ex-dividend. So here I can kind of click on it and it'll kind of show me that AbbVie, ABM Industries, AT&T, Caterpillar, Cisco, General Mills, JP Morgan, and Lowe's all pays out in the, or has the ex-dividend on the 1, 4, 7th, and 10th month of the year. So of these stocks here that are currently in this area, AbbVie is sitting as one that's down about 12.33%. AT&T is down 9.79%. Caterpillar is down 10.52%. And JP Morgan is down 10.72%. These are actually some of the worst performing stocks in the portfolio now. You know, Altria, if you've been watching my channel for a while, you'll notice that Altria was down 30%. If we go back and look at December, the performance for these specific stocks here, we had a bunch of stocks here in the negative. JP Morgan was down 13%. Altria was down 27.34. You know, we had a rough month back in October, November timeframe. We had a lot of stocks that were in the negative, but now we go into these current data, and really there's not a lot of stocks here that are negative down 10%. I'd like to see a few stocks kind of pull back from where I initially bought them, you know, where I thought they were a little bit of a value that we can continue to dollar cost average, but we'll give it time. I'm sure there'll be something in the future where a company will miss their earnings. People will sell off the stock and give me a better buying opportunity to allow me to kind of all average into these stocks. But anyways, so these ones here, AbbVie, AT&T, Caterpillar, and JP Morgan, I pulled them up here. So AbbVie is going ex-dividend here on April 12th. So it's not this week, but it is the following week here. So next Friday is when this one will go ex-dividend. AT&T is going ex-dividend on the 9th. So the 9th, that would be next Tuesday. So I still have, you know, I can buy into it now. Plus I can kind of buy into it next Monday as well, which is probably what I'm going to happen. Caterpillar here is showing that it doesn't have an upcoming ex-dividend. But if we come down here towards the ex-dividend performance here, if we look at the past history, it's a 420 ex-dividend date. So 4, 7, 10, 1, 4. So somewhere around the 20th of April is when this one will become ex-dividend. It's not showing currently on the chart, but normally as we get closer to that ex-dividend date, Caterpillar will show on this website that it will be going ex-dividend on the 20th of April. JP Morgan, this hasn't been one that I've been wanting to buy back into recently, but it is sitting about 10% in my portfolio, be in the negative. It's coming up on ex-dividend. You know, when I had initially screened this specific stock, its financials were in order, its price to sales, price to book, like all the financial metrics and such that I was kind of watching it for. I used JP Morgan for my, I used to have WAMU, Washington Mutual, back in the past. It became JP Morgan because it was acquired, and I used JP Morgan for some of my personal and business funds, as well as other little means here and there. But it's a good company, good solid company. It's going to be around for a long time. It has a short history of growing and paying out dividends because of the 2008 crash back in the past. Here we can see that it did cut its dividend from 38 cents all the way down to 5 cents for quite a few years, about what, 2009 to 2011, before bumping it up very nicely from 5 cents to 25 cents, and then as of that point has just been continuing to raise and pay out a dividend. So here we can show a very low percentage payout, and this is the reason they cut their dividend by so much, was because regulations came out that financial institutions had to have so much cash on their balance sheets, you know, so for the subprime loan. So that kind of beat them down a little bit. Now, aside from these stocks, I do have a little bit of cash sitting in the portfolio. I have 49 cents. Plus, I have been expecting $2.99 to kind of roll in. If you guys haven't released my video, but I will be releasing it here very shortly, the 1 month recap. Digital Realty Trust should be paying out $3.99. They didn't show it on dividend.com, but this website here is showing that it should have been paid out on Friday. So sometime tomorrow on Monday, I'm sure I will receive $3.99. Plus, I fund the account every week with $115.38. So if we add that all together, the $115.38 plus 49 cents plus the $3.99 that I should get sometime tomorrow, I believe. You know, I should have got it on Friday, but M1 sometimes with their holding company, sometimes they don't put it out on the exact date. So here I should be expecting to roll about $119 into and 86 cents into 5 stocks is what I'm going to be buying. So I've already made my buys. I've went ahead and added $23.87 or 97 cents into AbbVie. This it's coming up pretty soon here on ex-dividend. Plus, it's still at a good buying opportunity when I'm looking at its price currently. Whoops, I have its equity here, the percentage in there. It's not exactly below that 50-day moving average anymore, you know, hasn't hit there, but it has dropped below that 200-day moving average for a while. Now, this whole drop off was because their patent came off for their drug Humira, somewhere along, you know, Humana or something with an H. I can't pronounce it right now, but as of that point, investors lost a lot of confidence, and this stock has been plummeting. You can see that recently, within just the last few quarters here or months, you know, it's had some support at this $80 mark down here. So $80 and some change. If we go actually to CNN and take a look at this specific stock, we'll see its 52-week low. Actually, I don't know if it shows me here. Nope, didn't show me. So AbbVie here, its 52-week range is $75.77. So in that range, it could fall to that $77 point. And then it has support there, kind of recovering back up. You can see here that it bounced off that point back in November timeframe, recovered up, and then kind of fell off again here just recently. So down 10% for the year currently, and offers a good buying opportunity. AT&T, this one actually has done really well, has recovered nicely. My buying point for AT&T is a little in the, I believe the $34 point, but I'm going to be buying this one at its currently yeah, 34.59 is my average share price. And I'm just going to continue to buy into this one just a little bit by a little bit, probably until it's recovered above that 5%. Well, actually, in the portfolio here of the live data, AT&T is actually down in the about 10% range, but because again those dividends are wrapped up here within M1 side, so AT&T over the course of the last year that I've owned this stock, it's paid me out $30.38, and currently going forward, due to the shares here that I've been buying back in the recent months, it's going to be paying me out roughly $40.53 for 2019. And then as I continue to buy back more shares at this lower valuation, it's still a great company, and I'm just buying it with a higher yield on cost. It's buying it at a lower price, lowering my unit cost, increasing my yield on cost, and so on. So good buying rate. And so AbbVie, AT&T, Caterpillar, JP Morgan, those are the 4 stocks within my portfolio that I am going to be adding to. Now, I have looked up a 5th stock here, Medtronic. This is one that I've been watching. I have a list of dividend aristocrats that I've been kind of watching and monitoring for a while. This one isn't at its lowest point that it has been here within the last few months. If this one had got back up in January, that would have offered a better buying opportunity, but I wasn't sure how this one would sort of recover. Now, I'm not sure, sort of like AbbVie, it's in that pharmaceutical, it's had a lot of insider buybacks within this one just recently, which is kind of interesting. It has been one on my watch list for a while, and I'm just kind of watching it to see if it'll recover, if it'll kind of fall back. And I'm going to go ahead and buy it at this $91 point. And this seems like a good support level for its current area as of back in February timeframe. It's hit, retraced, bounced higher, retraced, bounced higher. So here I'm buying it at this dollar point. If it falls back further, that's completely fine. I would hold it into the negative, buying back more shares, adding equity into this position, as it's only about a $27, $28 buying position right now. If it falls, that's great. If it climbs, that's okay too. But we shall see how this one plays out here in the future as well. So here over on M1 Finance, I've already initiated my trades for AT&T, JP Morgan, Caterpillar, AbbVie, and Medtronic. So those are my 5 stocks that I'm going to be buying in this week. Here you can see my estimated buys. The next trading window here is in 6 hours and 53 minutes. It's about 12 in the morning here currently over on the West Coast here. So in about 7 hours, 7 a.m. my time, this should all sort of take place with the trading window kind of initiating all those buys. So last quarter, this current quarter has been really good lately. We're up some almost 13.5% from December 29th, 2018 until this current point. And I believe that's right on line with the rest of the markets. If we take a look at the S&P, the Dow Jones, and the NASDAQ, everything here within the last quarter, if we take a look at, I guess we could just look at the year to date. So S&P up 13%, the Dow Jones up 11.15, and the NASDAQ up 16.49. So keeping right there along with the rest of the market. Plus I'm getting some nice dividends here, both market gains and paid out dividends from the last couple months. So that is pretty much all I wanted to cover in today's video. If there's any sort of information that you want covered in these Monday buy videos, let me know in the comment section below. Are you guys buying any stocks? Are you dollar cost averaging into the market and maxing out your own Roth IRAs? Let me know in that comment section. And of course, if you are brand new to the channel, have not yet subscribed, hit that subscribe button below. I appreciate it. And give the video a thumbs up. And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.